Oh, Canada. You're really messing up my interest rates. This is the weekly report on Major Money Matters. Welcome to Major Money Matters. My name is Major. I'm the host of Major Money Matters, and this is the weekly report where we talk about what's going on in the mortgage world and with interest rate and how it could be affecting you if you're a buyer or you're a seller in this market. All right, as I said in the intro, everything was going great until we got some disparaging news out of Canada, where Canada decided to raise their federal funds rate to 0.25%. Let's take a look at the charts here because we were trending pretty good. And if you follow this channel, you know as this chart is going down, interest rates are going up. As this chart is going up, interest rates are going down. Pretty rough day on Wednesday of this week when Canada announced that they're raising their federal funds rate by about 0.25%. Now, this was surprising news. Now, to Canada's defense, they're seeing a lot of things that we are seeing in our economy. Strong jobs. Our jobs report came out a lot stronger than we expected to see. The short-term unemployment increase, we're not seeing that. Strong jobs, we're still seeing. Strong economy, we're still seeing. Therefore, they are increasing their federal funds rate to try to combat inflation, which could influence Jerome Powell and our Federal Reserve to increase the Fed funds rate. So the bond market did not respond positively to that on Wednesday of this week. We saw a reversal. We were coming down in interest rate from above 7% where we were when we were fighting the debt ceiling issue. In that situation, we were coming down. Now we've seen sort of a reversal. Hopefully this is just a small blip, but right now, take a look at interest rates. We're looking at about 6.89 on conforming conventional rates on average, 20% down. On VA rates, we're looking in the mid sixes, 6.5, 6.6, 6.7, depending on which bank we're looking at with that situation. But hopefully this is just a blip. If you're actually Canadian, shout out to my good friend Eric Stiles. I am just kidding about Canada, but look, you're messing up the markets. But that's where we are on interest rates right now. Also this week, CoreLogic released their home price appreciation report. Now, this was released on June 6th. However, this is covering home appreciation through the month of April. So this is lagging about 2 months behind. What are they seeing? Home appreciation still up solidly. Now, home appreciation is slowing. So the rate of appreciation is still going up. It's just not going up as fast. So during COVID, we saw 20% appreciation year over year. We're not seeing that, okay? We're seeing about 2% appreciation year over year right now, part of that being affected by the higher interest rates. But this is now the 135th consecutive month where we have seen year over year appreciation actually going up. What's their projection? Their projection is that appreciation between now, April of 2023 until April of 2024 is actually going to be up higher than 4%, okay? So appreciation looks good to continue moving forward. This is still a good time to buy a property. We're still seeing solid appreciation year over year when it comes to the numbers that CoreLogic is actually seeing. So the projections that this is going to be a terrible year for home ownership is not actually true based on the data that is actually coming out because we still have low supply. Low supply, high demand continues to put upward pressure on housing regardless of the interest rate. So great report. I'll make sure I put a link here in the comments so you can read the full report. It also lists some cities who are at risk for depreciation, some cities in Florida and stuff like that. So you might want to take a look at that if you're looking at buying there so you understand the risk associated with buying and what's going to happen in certain markets. Also in news this week, the White House rolled out their action plan to limit or impact discrimination in home appraisals. Now, This is a well-documented issue. In fact, I'll put an article in the comments from the Brookings Institute, a non-biased source, so you can read about this. It talks about the devaluation of Black assets. This also talks about the likelihood of a home to appraise less if it is owned by a Black or brown individual. So the White House rolled out their initiatives. I'll put that comment in the links here. I'll put the description for that article in the link. But one of the main things that I've seen, even as a mortgage professional, is the barrier to entry for appraisers. According to several sources, appraisers are one of the least diversified industries in the nation. Only 5% of appraisers are actually minorities. So one thing that's being pushed forward by the White House is something I've actually seen as a mortgage professional. Only 5% of appraisers are actually minorities. So one thing that the White House is trying to do, and they're trying to push this down to the state level, because the states actually controls the appraisal boards for that state or that local municipality. The states control that. So they have to adopt these things as initiatives. Only 5% of appraisers are actually minority. Another thing that I really don't understand about the appraisal industry is a college degree is required in order for you to be an appraiser, which there is no evidence that the presence of a college degree helps to form a more ethical or a more reliable appraisal or more accurate appraisal. So therefore, a college degree shouldn't necessarily be required. I'm a mortgage professional, and a college degree is not required in order to be a mortgage professional. These barriers to entries are something that the White House is pushing out right now, and we're hoping that states adopt them because the White House really can't direct the states to do this. They're just saying that, hey, they recognize this as an issue, and they're trying to impact or affect the states to do better so we can have more reliable appraisals and more equality across all sectors for all people in this country to build wealth over the long term. Finally, an article from the CFPB. This is the Consumer Financial Protection Bureau. Now, this is the bureau that actually governs mortgage lending. Now, they're putting out an article that says consumers can actually save $100 per month or more by selecting cheaper lenders. Now, the article does not go into specifically what a cheaper lender is, but it does talk about some things that affect the disparity between lenders or across different lenders. One of the things they talk about is the presence of a building that is near the buyer. For example, if you're looking for a mortgage and you're driving down the street and you're about 5 minutes away from your home and you see this big, beautiful building that talks about a bank of whatever or whatever mortgages or insert mortgage company here with veterans in the name, they're marketing to veterans or what have you, you will see that big, beautiful building and you're more likely to go there because that mortgage company is near your house and you think they're there to serve you. But what you're not realizing is if that mortgage company has a big, beautiful building, especially if you're driving down the interstate here in DFW, that big, beautiful building comes with an electric bill and a vice president and a branch manager and all of these people that have to get paid. And who do you think pay those people? You do when you get a mortgage. So that adds into the interest rate, and that increases your cost. Now, this study was done based on a $300,000 mortgage, but consider if you're buying a $600,000 home or a $900,000 mortgage, that grows substantially because they talk about disparity being about 50 basis points. The difference between about 50 basis points in this market is about $100 at the $300 or $300,000 level. But if you go to the $900,000 level, which some buyers are, you are going to be at a disparity of about $350 per month based on that situation. So therefore, they are telling you that you should consider cheaper options where there is less overhead and less people to pay and people are not just nickel and diming at you, so you get a lower monthly payment. And this is talking about the monthly payment itself. This is not even talking about the costs or the points associated with that mortgage. So this is actually information that's being put out by the CFPB that's encouraging you to shop around, call some different people, ask some different questions, figure out who's going to guide you through this process, which is what our business is based on. giving you the education you need in order to make a valuable decision, because likely buying a home is the greatest financial investment that you will likely make in your lifetime. All right, that's it, okay? If you're actually Canadian, all right, no hard feelings. I love my Canadian brothers and sisters, but the actions of the Canadian Federal Reserve is affecting our markets right now. We have to see whether this is just a blip. We have to see whether Jerome Powell actually reacts to this and takes the follow-on actions of our Federal Reserve next week. We'll talk to you about that. We'll see you next time and see you next week on the Weekly Report on Major Money Matters.